Hello friends, welcome to Nirmal Bank. I'm Piyush Jain, and today we are going to introduce you to a company which is bringing out its IPO. The name of the company is JSW Infrastructure, and today the management is joining us, the joint MD and the CEO of the company, Mr. Arun Maheshwari. Arunji, welcome to the show.
Thank you, Piyush.
Arunji, let's start from the start here. How the journey began, what the sort of business model apart from actually the JSW business. Help us understand how the company makes revenue and from where it all started.
Well, JSW Infrastructure started way back in 2002, 2004. During that time, essentially started for servicing JSW Steel and JSW Energy's group cargo requirement at Vijayanagar. So we picked up one port, we acquired one terminal in Goa. Uh, that was way back in 2004. Uh, JSW Steel and Energy being a process-oriented company, so we definitely would like to have the control on the supply chain management. With that intention, we started with this company, and good 14, 15 years we had been doing only captive cargo till 2018. We were largely more or less we were doing 100% captive cargo only, and we have been building ports thereafter. We had Jaigarh port, we had Dharamtar port, but largely all on the captive side. But as we started growing, we realized, those assets has already been built. Why not to sweat the assets? The hinterland has been good. The customers have been looking forward towards us. Why can't they use the assets for their servicing? So with that intention in 2018-19, we thought, why not to start making it as a separate vertical, which can service to the third party. We can invest onto the third party business terminals, and we can make it work as a separate business entity altogether. With that intention in mind, 2018-19 onwards, we started investing in all the third-party businesses. So majority of the investment thereafter has been on development of the cargo outside the group. So as a matter of fact, in 2019, when we were doing about 35 million ton of total cargo, only 6% was outside the group. Wherein
Okay.
in 2023, we did 93 million tons of about cargo, and 33% was outside the group. And if I have to talk about June 23, almost 37% of the total cargo handle has been outside the group. So
Outside.
the journey has been completely, changed in the last 5 years from almost 6% to 37% outside the cargo, wherein the total cargo has grown almost three times. So this has been the journey so far.
I'm also curious, sir, to know about your UAE operations.
So UAE is largely a O&M operations. We don't own any assets over there. Just because of as a group we have a presence over there. So being the kingdom knows that we are into infrastructure space, we are into port assets. So their ports have not been working as efficiently as what it should have. So they requested us to take a O&M and help them out to turn around those assets, which we did. So they have requested us to take the second port also, Daba port, which is starting maybe within a couple of weeks now. So these are the two assets what we run on O&M. We don't own the assets, but we have a manpower over there, which makes it work.
What are the names of those two ports, sir? Please give me those
It's,
names again.
one is Fujairah terminal in port of Fujairah. One is Dibba port. The entire port is being taken on O&M by us.
Okay, and Fujairah is being managed by you?
Fujairah port, bulk
Yeah,
terminal, Fujairah.
the bulk
There's
terminal.
a yeah, because Fujairah
Not
port is quite
not
big.
not the oil and gas terminal.
Not the oil and gas terminal. It's only the bulk terminal of Fujairah port, and the Dibba port is the full port we are managing.
Okay, very interesting.
Yeah.
And with this, that the group has more ambitions to go to other ports, like other geographies.
Sure. So, see, basically, Piyush, what is happening, this has been a sunrise industry in India. 25, 30 years back, this industry was not on the tick list of any of the business houses. Probably Adani Group has been the first one to start this business on a private
Yeah,
commercial. And that time, nobody knew that 25, 30 years down the line, this business would be quite robust and growing so fast, and it would be so good to have this kind of business. That's why you don't hardly see any major groups into this business. Only handfuls are there in this business. Uh, Primarily because it is a very capital intensive. You need to have a solid balance sheet. You need to have outreach. You need to have intention, passion, initiative. Everything you should to have this business. It's a very long vision business. It cannot be for 5, 10, 20, 30 years kind of business. You need to have 60, 70, 80 years kind of vision for that. So with that
so
intention in mind,
it's almost like the airport assets. Airports, they look more glamorous, but ports are something where actually the economy drives power from. So non-glamorous, but again, long-term assets.
I would say marine ports are still more difficult and more challenging because in airports most of the things are by the government, be it the
Yes,
land, everything, all the entities, everything is linked to the government control
yeah,
somewhere because
yes,
it's something to do with the air defense and everything. Wherein ports are given to a private players as well as into the major port, there are terminals which are given. So port are bit more challenging, I must say, to set up and to start. But again, whether airport or marine ports, both are with long-term vision. You should have 70, 80 years kind of vision, then you get into this business.
So another question I have is, what is the secret sauce here? You basically, the revenue from operations, EBITDA, PAT, all have been growing at a CAGR of 40% plus in the last 3 years. What is the secret sauce here, sir? What is really growing in terms of cargo, or what is really working so well for you?
So as I said, 2018-19 onwards, when we started, thinking about to develop this as a separate business or a vertical, and a lot of investment had happened since then. The balance sheet has been always been strong, but the thing is that the focus shifted from only captive to captive plus third party. So captive brings the stability and the very solid growth, wherein the third party brings a flair to as a separate business
Margins.
vertical. So we have been investing quite a lot in the last 4 or 5 years, and that's why you see the sudden growth coming in from 35 million, 40 million, 63 million ton, 93 million tons. This is how we have grown. So I think the investment what we did about 4 5 years back started yielding results in terms of capacity utilization now.
Right, and I was looking at the return on capital employed, almost 8% in 2021, then 11%, now 19%. And when I look at these numbers, then I start thinking, what must be the capacity utilization at present? What is the average utilization for the assets?
So if I have to talk about as on June 23, the average utilization of the assets is close to about
Um,
63.
I'm just looking at 19% for 12 months, like the financial year 2023.
Yeah, as on March 23, it is 57%.
57. So, which implies the return on capital employed can still go far higher because the
Yeah, yeah, yeah.
utilization
No.
can pick up.
So what happens, Piyush, that initially we were just spending the money, and that's why the ROC was lower. But as we started utilizing those assets, and these are a combination of terminals into the major ports as well as the greenfield port. So we go with that combination of business. So our capital deployed is very less, whereas the capacity against which we have to just pay a royalty because of we have a terminal in the major ports. By virtue of that, our capital deployed is lesser, but the quantity and capacities are almost equal. So as we have started utilizing our capacities, the ROC is increasing, and from here on, as you rightly said, at 57% utilization, our ROC is close to 19%, and there is still a headroom. If I have to look at the way the port industry works, the utilization can still be much higher than what we are doing as of now. So there's only an upside on the ROC which I can foresee from here.
And I can tell that this is going to be loved by the markets because markets love such kind of stories. And let's also talk about why you're raising funds, how much you're raising funds, the fund usage. As I understand, there are some sort of LPG terminals and other sort of activities which are going to be taken. So help us understand all of those.
So the total IPO size is close to about 2,800 crore rupees, out of which 1,200 crore rupees will be going towards the capex on the brownfield side. One is LPG terminal, one is upgradation of the container terminal, and there are some couple of smaller assets over there. So this will be 1,200 crore rupees will be going out of the IPO proceeds for capex. About 880 crore rupees would be going towards the repayment of loan, which we have a FCNR loan of $110 million, and balance would be for general corporate purpose. Now, there's an immense opportunity available within India. If you have to look at today, the government of India is getting into the privatization model. They really want to privatize each and every of their assets on the port side in the coming years. And that throws a huge opportunity for everyone to play around. We being into terminal in a big way in India, we understand this area very well, and we think we our balance sheet permits it, our passion permits it, our initiative permits it, and we have a intention to grow on this field. So, and being a large group and a solid balance sheet, we would like to continue to grow on this field. And this opportunity, what is being offered by government on the PPP model, we would like to encash on that. On top of it, we have some kind of brownfield expansions. We have some kind of greenfield expansions as well. So these combination are there, which will need huge capex, and that's why we are building a war chest, which can take us away from current level to a next level.
Another question on LPG terminal. Is it something which you're going to lease out to IOC, BPCL, or HPCL of the world,
No,
or
no, no,
is it
no,
something
nothing.
where you're going to actually put LPG and then this is sell out?
So as currently also we are running a small LPG terminal at Jaigarh Port, and now we looking at the demand, looking at the outreach of this terminal and the hinterland what we have, and the port facility, which is very deep draft port. Jaigarh is 17.5 meters deep draft port. So we are making a big LPG terminal so that we can cater to the hinterland as well as the nearby ports.
Okay, so which implies that like who is going to procure LPG for these terminals?
So I think the entire hinterland is very rich over there for the LPG businesses. So as we are building it, there are a lot of queries coming in, including the big HPCL,
So
IOCL.
they purchase from you, or like
No. We are just a handler. We are just the handler of the cargo. So they
yes,
can bring. So we don't have any say in the trading part of it. So we will create a facility wherein people can come and utilize those facility for their own markets.
Okay, understood. So that's on the infra part, sir. And how the sort of group looking at from the perspective of building assets? Any sort of major sort of expansion plans from there? Because I'm just connecting the dots here. The PAT margins are good, EBITDA margins are good, balance sheet is light. There's a good sort of equity raising you're doing, and there is also retiring of debt which is going to happen. This actually tells me that at some point of time you will actually need more sort of assets or projects to
Yeah, I totally
I would
agree.
say
Yeah.
double down on your cash flow. So how's
Yeah.
that going to look like?
No, Piyush, you are right while saying that, and definitely there's a pipeline of projects what we have been, exploring it. In addition to whatever the PPP model and the projects which are coming up for bidding in the government terminals and the brownfield expansions, what I said, there are also two greenfield ports which we are contemplating as of now. One is on the east coast of India, wherein JSW Steel is building a steel plant, and they have a port, concession over there, which they are signing it now, and that will be innovated to JSW Infrastructure to build a 52 million ton port. That will be in two phases. One would be 30 million ton, second would be 22 million ton. In addition to that, there is on the west coast of India, there could be another port in the state of Karnataka, for which the bidding has already been done, and we are awaiting the clearances. Once we get the award and everything, then we would like to build that port as well. That would be a second big expense for us. So our entire growth story comes from brownfield expansions, bidding in the PPP terminal, as well as building greenfield ports. So these are all huge capex items, and it takes quite a number of years and a good amount of money. Only strong balance sheets can permit these kind of expansions.
Absolutely, sir. Just one summary for sort of taking note of that. Within the cargo handling, perhaps which are the major sort of items which are being handled at your ports?
So largely, see, as I said, we started with our journey with JSW Steel and Energy. So we are generally bulk dominated cargoes. And about 85% of the total cargo profile today is from iron ore and coal, primarily coking coal in the coal front. And balance is all like container or sugar or fertilizer or LPG and barite, gypsum, steel. These are the other products. What we have.
Okay, fair enough. Noted. So that's the entire summary. A great infrastructure story, light on the balance sheet, good on margins, good expansion projects, and a sort of good lightening of the balance sheet with this fund usage. So perhaps everything looks, I think, very good, I think, for the market, and our viewers perhaps will love to actually take note of all the details and the stock in the upcoming IPO. So from our side, sir, thank you for coming on the show.
Thank you, Piyush.
We wish you all the sort of, I would like to say, we'll wish you all the luck and all the sort of wishes for you for the future also.
Thank you. Thanks for so kind words. Thank you.
And dear viewers, hope you like this conversation. And for now, this will be a wrap on this conversation. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.